With 2023 coming to an end, closing out the last quarter, approaching Christmas, the S&P 500 over the past month up over 4%, as well as the FTSE 250. So we might indeed be seeing ourselves a Santa rally where the stocks climb up quite a bit just before the beginning of the next year. So how has all this affected my Trading 212 portfolio? So here is my Trading 212 portfolio, and my current portfolio balance is £11,077. Now currently I have a nice return of £356, and that is a £3.33 increase. Now if I go into my account value, that is considerably higher at £14,700, and currently I have around £3,622 in free funds. Now over the coming days, I am going to be actually investing this free fund. I have been trading a little within the FTSE 250 and I have been making a tiny bit of money. We never know at the end of Christmas if the FTSE 250 is going to decline again, and I will definitely be putting all that money back into the FTSE 250. If I go into history, you can see that if I go into orders, my realized profit from Trading 212 calculating it is £262. In terms of dividends, I've received £127, which isn't a lot, but I also don't focus on just dividend paying companies. If I go into free shares, you can see that I've currently received 50 free shares with a value of £897. So thank you for everyone. If you do want to sign up, you will receive a free share and I will receive a free share when you use the link in the description down below. So generally speaking, this is a lot better than last month, especially during November when the stock market dipped a whole bunch, but since then we have seen quite a bit of recovery. So let's now go through all my individual stocks and see how they are doing. So first, I still have shares in Walt Disney, even though it's a very small amount. I have around 0.12 shares in that. That is down by 11.81%. Over the past month, Disney has kind of recovered a little bit, up by 9.79%. You can see that they have started again paying a dividend yield of 0.65%, which is not a lot. And as you can see from the income statement, revenue is going up, net income is staying roughly around the same. From the balance sheets, you can see that they have less liabilities than last year, and the amount of assets they have seems roughly similar. So from a cash flow perspective, you can see that their operating profits are increasing, and also cost in investing has decreased and cost in financing has decreased too. So things are definitely looking better for Disney, and maybe they can recover to the highs they used to be before, but I'm not too sure about that. So next I have 35 shares in Vodafone, and they are down by 23.84% in my book. So that is a loss of £7.63. Over the past month, they have tanked down another 10.15%. Their dividend yield is very, very high right now at 11.15%, and honestly, it could be cut at any point right now. From an income statement perspective, you can see that their revenue has stayed quite steady, but their net income is up. From the balance sheets, you can see they are saying that their liabilities are lower and assets seem to increase slightly. However, with these companies, you never know really what assets are, so take that with a grain of salt. So from a cash flow perspective, you can see that operating income is still quite high, and the cost of investing has decreased this year, and the cost of financing has increased. So next I have a tiny amount in the Germany all cap, and I have 0.87 shares in that. That is down by 1.63%. Over the past month, the German economy has really kind of bounced up by a huge 7.84%. The dividend yield of most ETFs is currently not mentioned in Trading 212. I really hope they change that. And as you can see, I'm only 1.63% down on this ETF. Now, the next ETF I have is by far my biggest holding on this Trading 212 investment account. I have 191 shares in the Vanguard FTSE 250. Over the past month, they have been doing quite well, up by 5%. In my opinion, doing really well. But as we know from the volatility of the FTSE 250, it is incredibly volatile and it can really dip 10% in a matter of days. That's what I really like about the FTSE 250. When it does dip and you do put money in it, you do seem to get that money back quite quickly because of that volatility. But then again, it is very highly risky and I wouldn't recommend it for most people. The ex-dividend date for this ETF is coming up. I actually might sell out on all my holdings before that, because what I generally tend to see is the stock price goes really high just before the dividends are paid out. That is the best time for me to sell, and then after the dividends are sold, what I see is that the stock price drops more than what it should do after dividends have been paid out, and then usually that is the best time to buy again and just live off the capital appreciation instead of the dividends. In any case, I am up by 1.77% in my FTSE 250 holding. That is a return of around £96. Next, I have 0.17 shares in Tesla, and they are up in my portfolio by around 15%, netting me around £4.32. Tesla has been doing quite well over this past month, up by 9.79%. They don't currently pay a dividend yield, and we can see from the income statement, revenue has increased huge amounts, so has net income. From balance sheets, we can see the total assets is growing over and over. From the cash flow perspective, we can see operating income has increased, but the cost in investing has also increased quite a lot. So next I have 0.2 shares in Starbucks. They are down in my portfolio by 6.29%, a loss of £1.08. So over the past month, Starbucks has been doing really badly, down by 7.4%. They pay a smallish dividend yield of 2.35%. And from income statement, you can see revenue has increased quite a bit over the past few years consecutively. From balance sheets, you can see liabilities are very high compared to the assets. And from a cash flow perspective, you can see more operating income than last year. And the cost of financing does seem to be eased on them from last year. So next I have 29.7 shares in Rolls-Royce. Over the past month, up by a huge 24.38%. So this would have been a great investment if you had been able to time the market. Overall, in my portfolio, they are up by 126%, netting me a huge £48.15. They don't currently pay a dividend yield, however. And from the income statement, you can see revenue is up, but net income seems to be in the negatives. From the balance sheets, you can also see they are taking a lot of liabilities. And from a cash flow perspective, you can see that a lot of this is in financing, and their financing costs does seem to be exceeding their operating income and what they're receiving from investing. So next I have 2.13 shares in PayPal. So over the past month, doing much better, up by 6.99%. In my portfolio, however, they are still down by 4.3%, so that's a loss of £4.50. They don't currently pay a dividend yield, and as you can see from the income statement, the revenue has been increasing, net income slightly decreased. Balance sheets, again, you can see assets quite high compared to liabilities, but then again, they are a financing company and they will probably take a lot more liabilities due to the nature of financing. From a cash flow perspective, you can see since 2020 a lot has changed. Operating is down, but investing and financing does seem to also be down. So next I have 2.3 shares in Orange. Over the past month, they have stayed quite steady, to be fair, up by only 1.12%. In my portfolio, down by 1.95%. Down by 44p, and in terms of dividend, they do pay quite a bit at 6.28%. So from an income statement point of view, revenue has stayed quite steady, net income increasing from last year. Here is their balance sheet, but again, don't take it for exactly what it is. Assets seem to be higher than liabilities, but from a cash flow perspective, we can see a lot is being spent on investing and financing. So next I have 0.09 shares in Nvidia, and as you can see, they are up by only 1.99% in the past month. In my portfolio, they are up by a huge 222%. Now that makes me wish I put a lot more money into Nvidia. Current return is very small at only £23 because I put in a very small amount. They have the tiniest dividend yield of 0.04%, and from the income statement, you can see they're doing very good. Revenue is significantly up since 2020. So is net income, although 2022 was their better year. In terms of balance sheets, you can see they probably have sold off some of the assets and their liabilities are increasing. And from cash flow, you can see a lot is being now spent on financing, which was a lot more than investing back in 2021. Next, I have 0.4 shares in Nike. Over the past month, they are up by a good 6%, and in my portfolio, they are up by 7.69%. That is a return of a small £2.66. Now, they do pay a small dividend yield of 1.29%, and from their income statement, you can see that the revenue has been increasing. Net income seems to have dropped by a tiny amount. From the balance sheets, you can again see that they tend to have a lot more assets than their liabilities. Of course, a well-known and very profitable company like Nike is going to have a lot of assets, so there's no worry in there. In terms of cash flow, you can see that Nike are spending a lot on financing, which at the current climate is probably something that a lot of big companies will have to do. Next, I have National Grid, and I have 0.49 shares in that. They are, for the past month, up by a big 9.52%, which is pretty good. In my portfolio, up by 5.65%, which is actually pretty good, and that is a return of only 28 pence. They do pay a decent dividend yield of 5.35%, which is actually pretty generous. From their income statement, you can see revenue has increased significantly and net income has actually boomed. From the balance sheet, you can again see that they have less liabilities than last year, and personally I think they're on quite a good trajectory. From cash flow you can see that they are spending a lot less on investing, or some of it's even being paid off this year, but they are spending a lot more on financing than they were last year. Next I have a tiny amount in Microsoft, so 0.03 shares. Microsoft did see quite a bit of an increase until the 29th of November and then a huge decrease, but overall they are still up by 3% over the past month. In my portfolio, still down by a small 0.87%. That is a loss of only 10 pence. They pay a very small dividend yield of 0.81%. And from the income statement, you can see revenue has increased significantly, net income quite similar. From the balance sheets, you can see the assets have been periodically and consecutively increasing in line with the previous years. From a cash flow perspective, you can see operating income is extremely high, but they are spending quite a considerable amount on investing and financing, which will hopefully pay off in the future. Next, I have 0.38 shares in Mercedes-Benz. Over the past month, up by a nice 9.43%. They are down in my portfolio overall, however, by 9%. And that is a loss of £2.06. They do pay a high dividend yield of around 8.27%. And from the income statement, you can see revenue is high, net income has seemed to have dropped a little bit. From the balance sheets, you can see that the assets seem to be decreasing, but also liabilities too. And from a cash flow perspective, operating income has decreased slightly and financing is quite high. But again, during these tough times, how many people are really going to go out there and buy brand new Mercedes-Benzes? Next, I have 320 shares in Lloyds banking group, and over the past month they have finally started to go up by 10%. In my portfolio they are now up by 3%, so that is a return of £4.46. They pay a decent dividend yield of 5.51%, and from the income statement you can see net income is down quite a bit. Balance sheets, again, you can see very high amount of liabilities compared to assets, but this is quite normal for any sort of finance or banking company. From a cash flow perspective, you can see that the UK bank scene is kind of suffering with a lot less in operating income. As we've seen with Metro Bank, they are on the brink of collapse. What it seems, a lot of people are taking out their money and not putting it within Metro Bank. With the rise of things like money market funds, over $1 trillion of money has actually gone into money market funds, and a lot of people are taking out of the bank accounts because they're really not paying much interest at a time where the central bank rates are in excess of 5%. So next, my second biggest holding is in the S&P 500, and over the past month they are up by 4.83%. Really happy with the S&P 500 currently. In my portfolio I am up by a nice 3.81%, and that is £148 just because I have a bit more in these ETFs than my normal stocks. The GSPX does pay twice a year, and I don't think the ex-dividend date of this ETF is anytime soon, so I'm not too worried about the dividends here. Next, I have 6.24 shares in Royal Mail. Over the past month they have kind of gone through a whole roller coaster, up by only 1.08%. In my portfolio they are up by 14.17%, which is really good. That is a positive return of £1.88. They don't currently pay a dividend yield, and as you can see from the income statement, revenue is high, but it has been reduced since last year, so has net income. From the balance sheets you can see they are selling off their assets, it seems like, but reducing the amount of liabilities they have. But from a cash flow perspective, we can see that there is a lot less in operating revenue, but they are spending less on financing. So next I have 23.12 shares in IAG. Over the past month, they are up by 3.61%. Overall, in my portfolio, up by 1.72%. That is a gain of 62 pence. They don't currently pay a dividend yield. However, you can see from the income statement, revenue has increased considerably. Net income is no longer negative. From the balance sheets, you can also see assets increasing quite a bit. So are liabilities. But these sort of airline companies, they do have a lot of liabilities, as they do have to kind of stock up a lot on petrol, and petrol prices always seem to change. From a cash flow perspective, you can see the operating income is in the billions. However, they're spending a lot on investing, which is most likely due to expanding and investing in new infrastructure for the planes and stuff like that. Of course, since 2020, we have seen a huge boom in airline ticket sales, so that's a good thing for these companies. Next, I have 3 shares in H&M. They are up by a good 8.24% over the past month, which is really good. In my portfolio overall, they are up by 19.7%. That is a gain of £6.85. They do pay a decent dividend yield of 3.84%. And as you can see from the income statement, revenue has been increasing, net income down a bit. From the balance sheets, you can see looking very similar to previous years. However, from a cash flow perspective, we can see operating cash flow in is a lot lower than last year, and they are still spending a lot on financing. So next I have 0.29 shares in GlaxoSmithKline. They are up by 0.47% over the past month, so not exactly great. In my portfolio, however, they are up by 8%. That is a 32 pence gain. They do pay an okay dividend yield of 3.89%. And from looking at their financials, you can see that their revenue has been increasing. Net income seems to have soared. Balance sheets, you can see less assets, but also less liabilities. So more importantly, from a cash flow perspective, you can see the operating income has decreased a tiny amount since last year, but they are spending a lot more in investing and the financing costs are coming back to them. So next I have 2 shares in Direct Line Insurance. Over the past month, surprisingly, they are up by 12.64%. In my portfolio, I am however still down by 2.25%, and that is a loss of 9 pence. They don't currently pay a dividend yield, and as you can see from the income statement, net income has completely gone down the drain, and from a cash flow perspective, we can see increasing operating income. However, a lot is being spent on financing. So next I have 9 shares in Deutsche Lufthansa. They are up by 8.69% over the past month, doing pretty well. In my portfolio overall, however, they are down by 6.47%. That is a loss of £4.47. They don't currently pay a dividend yield, and as you can see from their income statement since 2020, revenue has increased quite a lot, so has income, and from their balance sheets you can see that the liabilities have decreased and assets have increased, which is really good to see. From a cash flow perspective, we can see operating has increased significantly, with a lot more being spent on financing and a bit more being spent on investing. So next I have 1.5 shares in Delivery Hero. Over the past month, surprisingly up by 14%. In my portfolio, still down by 4.59%, loss of £1.96. They don't currently pay a dividend yield, and looking at their financials, revenue has increased quite a bit. Net income, however, has decreased. Balance sheets, you can see assets are a lot higher than their liabilities, but again, I won't take that for what it is. From looking at a cash flow perspective, you can see they are operating at a loss, with only financing being in the positive. So next I have exactly 1 share of Carnival. Over the past month, they have been doing incredibly well, up by 38%, not sure what's going on there. In my portfolio, they are up by a massive 83%. That is a £5.85 increase. They do pay a dividend yield of 3.11%. I do think this is new, I didn't realize this last time, but from their financials you can see revenue has increased significantly. Net income is in the negative but slightly increasing from last year. We can see from their balance sheets that the total assets are quite similar, but liabilities are slowly creeping up. From a cash flow perspective, we can see still operating at a loss with only financing in the green. So next I have 18.42 shares in BP. Over the past month they are down by 2%. In my portfolio overall, down by 12.3%. That is a loss of £12.12. They do pay a decent dividend yield of 4.79%. And as you can see from the income statement, no surprises here. Revenue has soared. Net income still lower than last year when they were profiteering beyond their wildest dreams. From the balance sheets, we can see that their assets do seem to cover their liabilities at a glance anyway. And from a cash flow perspective, you can see that operating income is huge, but they are spending a lot on financing, which could pay off later in the future. Next, I have 0.12 shares in BMW. Over the past month, doing pretty nicely with a positive return of 9.51%. In my portfolio, they are up by a measly 0.76%. That is a gain of 8 pence. So they do pay a very high dividend yield of 8.62%. And as you can see from the income statement, revenue and net income seems to be increasing. Balance sheets, you can see that liabilities seem to increase a tiny amount, but their assets are also increasing. See, from a cash flow perspective, we can see the operating income has increased. Cost of financing has increased significantly. Compared to a company such as Mercedes-Benz, which most people will see as its direct competitor, they do seem to be increasing their operating income. Next, another car company for some reason, I have Aston Martin, 1.37 shares in there. Over the past month, up by 9.36%, not too bad. Overall, in my portfolio, up by 60.8%, a return of only £1.21. No dividend yield. However, from the income statement, you can see the revenue has increased quite nicely, but their net income is still well into the negatives. From a balance sheet perspective, you can see assets and liabilities have increased slightly, but from a cash flow perspective, very importantly, we can see that they are still not operating at a huge profit and they are still spending millions on investing. So next I have 0.02 shares in Asml. Over the past month, up by 8.54%. In my portfolio overall, down by 3.3%. That is a loss of 40 pence. And as you can see, they pay a very small dividend yield of 0.92%. And you can see from the income statement, revenue has been increasing quite a bit. Net income seems to be increasing slightly too. From a balance sheet perspective, you can see assets increasing but also liabilities creeping up. But more importantly, cash flow at a glance, you can see operating has gone down a bit, but the cost of financing has also reduced this year. Next we have Apple. I have 0.31 shares in Apple. Over the past month, up by 7%, doing quite well, in line with the S&P 500, as Apple is one of the biggest companies by market cap in the S&P 500. Any changes in the S&P 500 usually have something to do with Apple. Overall in my portfolio, that's a positive return of 24%. That is a return of £9.69. Nice. They pay a very small dividend yield of 0.49%. From a financial perspective, we can see revenue is very, very, very high. Net income is very high. Balance sheets, again, companies like this, they'll have very good balance sheets. From cash flow perspective, we can see operating is over 100 billion in operating, but financing is also around 100 billion too. So companies like this seem to want to expand a lot. Next, I have over one share of Amazon. Over the past month, they have been on a steady incline with a lot of roller coaster up and down. They are up by 3.75% over the past month. In my portfolio, however, they are up by 45%, which is really good. That is a return of £42. No dividend yield, but you can see from their income statement, their revenue has increased. Balance sheets also look very, very good. From a cash flow perspective, you can see that operating is pretty high, but also investing costs are quite high too. Next, I have Google or Alphabet. I have 0.26 shares in that. Over the past month, they have increased quite a bit and then dropped quite a bit and then increased quite a bit. Overall, up by 2.4%. In my portfolio, up by 23.3%. So that's a £5.42 increase. No dividend yield, but again, companies like this, their financials are looking very good, revenue increasing in line. Balance sheets also look very good, more assets than liabilities, of course. And from a cash flow perspective, we can see that operating income is still quite high. Last but not least, the tiniest amount in AMD, 0.03 shares. Over the past month, up by a nice 13.51%. Wednesday, 6th of December, something happened and AMD shares shot up. No dividend yield, but you can see from the income statement, revenue increasing a lot. Balance sheets, you can see assets completely cover liabilities. And from a cash flow perspective, you can see operating income is quite high. Investing seems to be in the positive for them, and the cost of financing is high too. Now, I only have one pie, so I'm going to go through it really quickly. This is the copy of the almost daily dividend pie. So the pie overall has netted me a loss of 2.51%. That's a loss of £9.43, not too bad. In terms of dividends, I've gained £12.77, so that does kind of cover up for the loss. You can see there's 50 companies in this pie. Companies such as Apple, Realty Income, 3M. I'm going to put the link in the description down below for the pie, so you can actually go and see that for yourself if you're interested. But as you can see, a lot of these companies are in the green and a lot are in the red. There's a mixture of everything, but overall it is down by around 10%. So next I have my stocks and shares ISA. You can see that the current account value is £2,999 with no free funds, everything invested, 100% ISA utilization. So this is my current tax year's ISA. From April next year, you're going to be able to deposit into multiple ISAs, so this no longer really applies. But in any case, my portfolio is down by 2.51%, so that is a loss of £540. Total invested is 21,540 because I did make a few trades, made a few profit, and then reinvested the whole thing again. You can see I have two holdings only, 716 shares in the FTSE 250, down by 2.59%, so that's a loss of £553. The ex-dividend date, like I said, is coming up soon, and I'm going to be making a decision to whether I actually sell it or not. But my average buy-in price was £29.81, which valued now is actually pretty high. If it does reach that or exceed that, I am definitely going to be selling. Next, I have a small amount in the S&P 500 by iShares. As you can see, 24 shares up by 7.43%. That is a gain of £13.20. If I put all my £20,000 into this, I would have been a lot happier with a lot higher gain. So it really is about the long term and putting your money into things that have the most potential in growing, as that will build you wealth at a quicker rate. If I go into my history again, not much has changed. Realized profit is £1,110. In terms of dividends, because I do hold a lot in the FTSE 250, as you can see, both of these payments are from the FTSE 250. I do have a total dividend payment of £424, which I don't have to pay any tax on because this is a stocks and shares ISA. So make sure to check out some of my other videos and I will see you in the next video.